you make a mistake and you admit it and you correct it, so then you are earning also a trust. Everything starts from the tone at the top. The culture that brought you here is the culture what will take you forward.
Hi everyone, welcome to the Dollar Diaries. Today I'm very happy to be joined by Khalid Chami, who is an avid kite surfer and a horse rider. Aside from the fact that he has 15 years of experience in investments across the region, he is the CFO of Ali & Sons Holding, as well as the ex-controller at Gargash Holdings. Thank you so much for coming on.
Thank you very much.
We saw Lazard come this year. We've seen Brookfield come last year. We've seen like a bunch of different hedge funds and asset managers, as well as investment banks, have moved over. And I think this place is now becoming, even for example, HSBC, they cut their London team. They said, okay, we're moving Middle East to be our headquarters. A lot of places are saying this is now the epicenter of capital, right? Absolutely. At least for Asia. And that's very fascinating for example, for juniors, for me as a young person who's growing in the investment field. It's interesting to see. But would you know, I always have this conundrum in my head. You could be at the heart of, like you said, VC and startups and fast capital and fast ideas and growing, burgeoning trends, or you could be at the heart of legacy institutions that are now coming here. And those are very different fields, right? One is something that's fast and quick and you learn a lot, but there's no stability. The other one, there's still no stability, but there's age-old structured learning that you're getting. What do you think is more preferable for someone who's young?
So I think the answer, it depends. What do you want and how much risk you want to take and what do you want exactly. So when you talk, for example, about purely investment boutiques or investment banks and so on, it's a different ball game because you are purely in the heart of investment, doing deals, especially if you are on the sell side. So you have that stress, you are chasing opportunities actually, and you are trying to raise capital in the region and so on. So this is nothing wrong about that. So it depends on what do you want to do. But when you are talking about legacy and specifically you're talking about family business, you are talking about legacy, you are talking about history. So almost, let's say, most of successful family business in the UAE, they are 50 years old and more. I have even worked for a family office that is 100 years old. So Gargash, for example. Gargash is more than 100 years. Now where I work, Ali & Sons is almost 50 years. So they are successful. So they must have been doing something right in the few decades in the past. Thinking for other companies or family business, they want to keep doing what they know. They don't want to venture in things that they don't know. And this is somehow how Warren Buffett thinks. So Warren Buffett said, if I don't understand it, I'm not going to invest in it. So, and I am more with that style of thinking. Yes, you have to venture in new things, but when it comes to business, it's not a game. It's not a game. It's especially when you are in a position like where I am, you cannot gamble with money that is not yours. So you have to deliver decent return, but you have to balance risk with opportunities. So
yeah, Warren Buffett's point is a very good point, but I slightly disagree with the inherent thesis of that point, right? Because he says you got to invest in what you know and what you understand, and he doesn't understand certain things, so he doesn't touch it. But it's not like he doesn't invest in it. He says, okay, I have people who'll understand it, and I will put money through them, right? So I feel like, especially this region, as much as family offices are almost embroiled in their DNA, right? They were based on a foundation. They have to evolve or they have to die, right? It's one or the other. And I guess that my question there lies in, when you walk into, for example, you've left Gargash, you walked into Ali & Sons. The first day in, or I guess the first few months, you're learning their DNA, their culture, their traditions, what they stand for, what they're good at, what they typically invest in. And when you take it from there, now how do you decide to balance new investments with what they've already done in the past? What's that balance look like?
So I think everything starts from the tone at the top. So you have to understand the shareholders, what they want, what they stand for.
Sorry, is the shareholders typically the family itself? No one else?
The family.
Just the family.
So you have to understand the family, you have to understand the culture, you have to understand what they want and what they don't want. And when you understand this and you understand the tone at the top, also you have to understand the strategy. And as a group CFO, you should be part of that strategy, because if you are not part of that strategy, you are just an expensive bookkeeper. So you are not really a CFO. So if you are excluded from the strategy formulation and the strategy execution, so you have to understand you are not a CFO. So you are, as I said, just an expensive bookkeeper.
Accountant.
So an accountant by the end of the day. So once you are part of that strategy formulation and strategy execution, over time, you will understand what works for the family, what doesn't work, and what you can recommend. So you will find your way. There is no recipe. There is no playbook. This is how you do things. And this is, I think, one of the beauty of family businesses. There is an emotional, there is an interpersonal connection. So you have to understand the board, you have to understand the shareholders in general, you have to understand your colleagues, but also most
there's
of them
a trust and attachment.
Yes, and you have to build over time. You have to build the trust. It's not about you have these diplomas, you have done your CFA, you have done CPA, you have done your MBA, and so on. You are, let's say, a big shot in the market. Still, yes, they respect that, but they need to trust you. And trust is something that you earn over time. You earn over time because you will be tested in a way or other, like any other business, even if not a family business. Because when you start delivering proper advice, when you start, especially when you make mistakes, if you make a mistake and you admit it and you correct it, so then you are earning also a trust. But you don't earn a trust just by the good things you have done. It's also how you deal with things when things go wrong. So if you are not hiding mistakes, if you are not trying to mislead or trying to be to show that you are ideal and you never make mistakes. So I think it's a mix of things.
100%.
But the bottom line is you need to build that record. You need to build that trust, and from there, many things will happen. From that basic or that foundation, which is trust based on your competency, your skills, and also based on your honesty and integrity.
Yeah, I see that. I think there's transparency to a fault, but then there's transparency because of who you are. And once people understand who you are, then you can start working together, because now they actually have a foundation for this is the kind of person that will come and be honest and tell me what's wrong and right. And if he can't do something, he'll say it, but he'll try to make it work. But as long as he says it, it's okay. When it comes to, I love that you said strategy development, because a lot of people in today's world will say, I'm a CFO, I'm the controller's boss. I'm a bookkeeper, right? Yes. I will cut costs. I will be the steward of the or like the guardian of the ship, and I'll make sure things are, we have liquidity, we're good, we're cash rich, we're chilling. You are saying, I want to do that, but also I want to be part of the strategy that we devise. And I would assume you have a CIO, right? I would assume Ali & Sons has a...
We don't have a CIO as such, but we have an investment team, and we play together the CIO role.
Okay, but that's awesome. Okay.
We don't have a CIO as a separate.
Right. Is that one of the hats you wear at times?
Somehow,
Right. Okay.
Not fully, because see what I was saying when I said trust and honesty. When you start from there, so then the next step is you have to deliver value. You have to deliver value, and even sometimes I try to change the title. How you look at yourself. You are not chief financial officer. You are chief value officer. Because you need to add value. So add value sometimes, not necessarily by cutting costs. Personally, I don't believe in cost cutting. I believe in cost optimization, because if you go very mechanical and automatical way of cutting costs, especially when you have a crisis or you have a business that is losing money, and you decide, okay, remove staff, remove this, remove that, maybe you are killing that business. You are not helping the business. So if you want to be a lazy CFO, you will just say, okay, I need bottom line of 10 million to reach 10 million. This is how to do it.
Needs to be cut,
fire this many people. So this is a lazy way of doing finance and lazy way of creating value. I think the best way is you talk to the business. So if you are pro-business, you have to talk to the sales team. You have to talk to the operational team, and you have to talk as an enabler. So I think the first question you need to ask as a chief value officer is, how can I help? It's not, guys, you are missing your budget, you are missing your targets, and start talking a very threatening tone. That's a way of policing or way of trying to play the hardball game. It's not helpful. It doesn't help the business. It doesn't help you to grow. It doesn't help the company to grow. It's not helping anybody. It's just another way of flexing your muscles. It doesn't help.
Yeah, and it doesn't tell you the pain point in the business.
If you are pro-business, if you are pro-value creation, you need to ask, the first question is, how can I help that business? Maybe there are something wrong in your department in finance that are not helping the business to grow. Simple thing, if your payments process is very much legacy system, you don't have automation, and if you take, for example, a construction business, where if finance is not streamlined properly, you can delay that business, because if you are not paying on time and you have subcontractors stopping mobilization, so then you are hurting the business. And you will come by end of the day, or by end of the day, say why you are missing your budget, but whereas you are not helpful. The other thing also, maybe you are not, as a finance, you are not helping with proper reporting, timely reporting, and still you are not helping the business. So when you are coming to any business, be it in industry, be it in oil and gas, be it in any business, if they are facing issues, before pointing fingers, before starting telling people what to do, you need to ask yourself, how can you help this business? By giving them the right data, by giving them the right processes, and by help them to optimize their cost, not cutting the cost necessarily, but optimizing that cost. Sometimes it ends up by cutting the cost, but it should not the first idea is, how can we reduce cost? How can we do this? Maybe the other answer is on the top line, how we can increase revenue.
Yeah.
So maybe that's where you can come and bring your experience, especially if you have been in multiple businesses, multiple places and geographies, you can bring ideas.
Yeah, I mean, I feel like it's simple logic as well. You'd rather be a revenue center than a cost center, right? You would rather generate more revenue and see how you could expand, maybe increase your margins over time in some way, but grow the business first before trying to shrink it and save yourself money.
Yeah.
Another question I'd have about this would be exactly that. You walk into a family office, for example, and mashallah, you walk in at a pretty revered position. You're CFO, right?
Okay.
And now you have 4 or 5 verticals that perhaps you've never had your hands in, right? So how do you sit down and say, I should be able to set these targets? That's the first one. I should be able to set these targets for oil and gas, these targets for construction, these targets for healthcare, these targets for whatever. And then the second one is, beyond the targets, how do I look at what's possible for expansion? Is it, do we close a facility and open a new one? Do we open new routes to a different area? Do we expand in terms of export? Do we, there's so many things you could do for expansion. So how do you sit with a new industry immediately and say, okay, now I'm in control?
So I think sometimes you need to talk to people that are smarter than you. So when you come, for example, to expansion, it's wrong for anyone who is not from that business to pretend that he knows that business before or better than people that they have been in that business specifically. If you are talking, for example, oil and gas, even if you have never been working in oil and gas and you don't understand oil and gas, but you can do little of research, so you'll understand the basics, but it doesn't help alone. You have to talk to the people that they have been in this business for long, and you simply ask them. You have to accept your ignorance about that business and go and ask the expert. So I think the best answer is ask the engineers that they have been in this business, ask the business development team that they have been in this business while doing, for example, your 5-year plan, or while you are doing your budget. Is just ask them questions. What would you do? What are you thinking about in terms of expansion? And we have an event that we call reimagination of the future, or RTF. So we try to reimagine the future by asking questions. So we get together, and we ask everyone, what would you do, or what are things or initiatives, or strategic initiatives you want to put in place to grow that business? And sometimes we precise even how many folds we want. If you want to take this business 3 folds in the next 5 years, what would you do? So you will not take all the ideas. So you will filter, you will work together on those ideas. But I think the answer is talk to the people who knows that business, listen to them, get from them these ideas. Sometimes some ideas will be rationalized, repackaged, refined, and presented to an investment committee. And sometimes there are ideas that it's very early, or it's even taken us out of the right track where we decided to go. Because also from opportunities, if you are going to say yes to every opportunity, there is an opportunity cost. Opportunity cost in terms, even your time of studying those opportunities. So if you have today on your table 10 opportunities to look at, if you spend time equally within this, you will not maybe, it's not the most efficient.
No,
so the first thing to do is which opportunities you may kill just by a glance. So for example, if you are in oil and gas and someone is saying, let's say you are doing downstream oil and gas, and someone is coming with upstream, which is not your specialty. You don't know, you have no idea, you have never done it in the past. So maybe you want to diversify in upstream, and you will say, okay, this is the priority for me. Or you know that there is no plan now to diversify in upstream, and you say, okay, kill everything that is upstream, let's focus on downstream. So it comes again from your strategy, it comes again from your strategic objectives and your capabilities. What can you deliver? Because again, if you take another example in construction, if you are doing construction, high-rise towers, and they are doing hotels and so on, and suddenly you have very good opportunity in infrastructure, if your decision or your plan or your strategy is to diversify in infrastructure, maybe this is an opportunity to look at. But if you know you are busy, you don't have enough labor, you don't have enough engineers, you don't have this, and you have to build specific capabilities to deliver projects in infrastructure in a domain that you have never been in, you have to think. You have to think what are the risks and what are the rewards. If your decision is, I want to take chance, I want to venture in that line of the business, fine. But if you know you cannot, you don't have the capabilities, at least in the short term, maybe you say, let's park this idea or even kill it. Let's focus on other opportunities that may deliver return and value in a shorter time.
Yeah, I completely, I mean, personally, I would always buy upstream just to control supply chain. But I completely see that because, I mean, personal anecdote, for example, right? We see on a day-to-day basis, or I guess a week-to-week basis, between 8 to 10 new investment opportunities. We're sitting on 4 to 5 transactions we're doing currently in the middle of the process. And at some point, no, we're like I don't want to say private equity company. We're a corporate investment arm with one corporate LP and one family office that does industrials, hospitality, automobile, stuff like that. So we invest and we look at early stage sometimes if people send us opportunities. So it's fascinating because you're on live transactions, but this opportunity looks cool to you personally. You have to stick to your investment thesis.
Absolutely.
Because as soon as you stray away from that, you're like, oh, personally, subjectively, I find it fascinating. You're wasting time. And honestly, there's only so much bandwidth you have on a transaction.
Just to confirm what you are saying, I have seen opportunities where a person is powerful enough to take a whole organization for an M&A just because he wants to have an M&A experience. So you as a CFO or as whatever is your position in the company, if your loyalty is to the business, you want that business to thrive, you will make decisions that are good for that business. As I said, maybe some opportunities, personally, I like them. For example, I love Fintech. Personally, I have invested in Fintech multiple times. But when someone coming to us in any company I have worked for, is from Fintech, yes, I like, but it's not about me. It's about how we are going to allocate capital that we have that will bring money. So if I have, for example, 2 opportunities in Fintech, it's both of them in Fintech. But if I have better opportunity in healthcare or in AI that is going to deliver more value, of course, you have to go with what is good for the business. And you cannot take the business for a ride just because there are some personal preferences that you have.
No, absolutely. I've noticed as well, especially in this region, like before I was at this corporate investment, or I did proper middle market IB, and it's so fascinating because once you do cross border M&A and stuff like that, everyone has a lot of fluff. Whatever business you're selling or trying to buy, it has a lot of fluff. Here in this particular region, especially family offices, especially like regional entities that have been here for 100 years, 50 years, 30 years, they cut through all of it. They know exactly the kind of metrics they want. They know exactly the kind of cash they can build off of this investment opportunity. And if it doesn't happen, they say, okay, it could be a great opportunity, but please leave. They're very direct. And I think that teaches you quite a lot about the kind of investing you should be doing.
Absolutely. So just to add what, so here in the region, you have multiple companies. They are coming for fundraising. So I go to multiple events and the same question is coming every time. So how to raise funds from family offices? So the short answer that always I had is, first of all, who you are. So who you are from the family office perspective. So maybe you are a good big name, without mentioning names. So you are, for example, a very known company or a VC or whatever vehicle you are trying to raise funds through. But if you are new in the market, so first thing you have to present yourself in a way that people will want to develop or elaborate more on the discussion. So if you are, for example, it's your first fund, so you have also to have lower expectations because you don't have enough track record unless you have been, for example, in a big VC or a big private equity. And we know Anas, he built that much record in that place. So if he's going alone and doing it, so he's known in the market. So who are you and the trust that you are going to build in the beginning. So your track record is the most important thing. Because when it comes to investment, yes, people want to take risk. People invest in VCs, invest in private equity, but they don't want to invest in people that they don't know, they don't trust. So when people come here to the region, I always advise them, okay, present yourself in a way that you will inspire trust. So one of the things, if you have, for example, a regional office, if you have commitment to the region. So if someone, for example, come in and he is saying, I am bringing capital from outside of the country, I'm bringing technology and know-how, and also I'm raising capital from the region. He's more, let's say, trustworthy and is inspiring trust because he is committed. He's not just someone coming to raise fund and maybe we'll not see him again, or we'll not see her again. So it's how you let's say approach that first conversation, that first time you are talking to people, and it takes time. It's kind of data points from statistical perspective. So first time you are meeting, you are discussing about few things. You're trying to understand the logic, what they invest in, what they don't invest in. So the basic thing, as I said, it's for personal people who are working for family business, but also for people who are trying to raise funds. You need to build that trust, and trust takes time. It takes many data points to see that evolvement of the trust.
Yeah, absolutely. Just adding on to what you said, unless you have a track record, there's three. I mean, in my head, there's three whys I ask. Why you are the right person for this? Why this market right now? What is the timing of this market? And then why this product? Like, why you and your product and this market are perfect? And if these three hit, then you have credibility. But unless you have a track record, you need those three things to hit. Absolutely.
And I think also from again fundraising. So I have seen a change in the way people that raise in fundraising, they have changed and they have understood the region more. So in the past, they used to come like they are coming here just to take money. So they are thinking like these people, they don't know what to do with their money, who are coming here to show them what to do. Now, in the last 15 years when I came here, so I have seen this evolvement. So the family offices, the family business, they are very well educated. So when you find, for example, family that their second generation or third generation, they have studied in the most prestigious universities in the country, outside, they have traveled a lot. They have been working also for big companies in the country and outside. So when you are talking to them, they understand what is investment. They understand VCs. They understand private equity. They understand private credit. They understand CLOs. They understand all the complicated technicality of when it comes to investment. So when you are talking to them, you have to understand that you are talking to someone who maybe understands better than you what you are selling. So this has changed over time. So over time, the people coming from the West or even from India or from China, they know that we are talking to a sophisticated investors that you can even, they are like institutions. So you have now, even the governance in most of the family offices, and Alisan is one of them, there is an institution. There is not one-man show. There is an investment committee, there is a board, there is a general assembly, there is even the family is involved, but they have clear assignment and clear responsibilities. You not have one person will wake up tomorrow and will say, okay, let's give Anas 10 million. It doesn't work anymore.
That would be nice.
So you'll be happy. But all the family offices, the respectful ones, the big ones that you know, all of them, they have built a structure. They have built a governance. And all of them, they are aligned around the strategy of the country. And they are serving the country by doing business in the right way.
Yeah, I've always found that very fascinating. Every time we speak to a family office, because, for example, I have an IC, I have a board, We sit down, I make IC presentations, make a model, go present to them, explain to them. But it's fascinating that family offices have been doing this for so long that they have developed strategies that is fully entrenched in that IC. And they say, okay, now the investment team functions like an institution completely. And I kind of wanted to redirect this also to restructuring almost, because we can get into M&A and why you have bolt-on acquisitions and what you look to acquire, et cetera, et cetera. But you also have a bit of experience in restructuring, and that's something I personally have never had practical experience in that, right? So the first question in my mind is, how long do you give a company? If you're saying, okay, I'm going to try to turn this around, do you give it 6 months? Do you give it a year? Do you give it 2 years? How do you know when it's time to put the dog to bed, or to keep trying to resuscitate it?
So I think for when we say restructuring, it's not necessarily things not going well. Maybe you need to be better. So most of the time, people, they associate the word restructuring by associated to problems or issues, not necessarily. So you have some cases where you have a business that is losing money, and as we said, we are trying to. It's a dead horse. You cannot teach a dead horse how to run because it's dead. But most of the time, there is this theory about dead horse. So you are trying to train, or you're trying to educate a dead horse. So if it's dead horse, leave it, bury it, and move to the next horse. So maybe my horse riding experience now is coming in. So, but if it's not a dead horse, you need to work on it. So you work on it in a way, as I said in the beginning, ask the people from that business. Sometimes you need help from outside. You talk to a consultant because you need a fresh eye. You need an external who can give you an idea, but no one knows your business better than you. Consultant, yes, they can be useful. They will bring you experiences. They will bring you the methodology. They will bring to you how to structure your thinking process and so on. But no one knows your business better than you. This is most of the time. Sometimes you will have someone who knows better, but in the basic case scenario, because you have been in this business long, you know the issues, and most of the information and data you are giving that the consultant is asking for, you know it already. So, as I said, if it's not a dead horse, you have to maybe bring an internal consultant or external and build a thinking process how you are going to take this business out from the negative or the red line and to the future. But how long it takes to answer your question, it depends. It depends. Sometimes it will take a quick turnaround. It's simple issues, or maybe you have to divest from some part of the business, or you have to bring another or to acquire something that will help. So it depends really case by case, and it comes again out from your understanding of that business. But for family offices, or for, let's say, for family business, sometimes we're talking about restructuring from how you're going to relocate resources. Sometimes you go from decentralized, let's say, arrangement to centralized and to shared services. Sometimes you are going also through digital transformation. You decide, I need an ERP as, let's say, as the foundation, and on top of the ERP are going to build other systems, treasury systems, accounting systems, sales systems that will feed that ERP. So you will have your data, then you start building your dashboard, you start building your data lake, and you start doing AI and all these things. So this is more on the digital side. In fact, you are restructuring. You are restructuring, you are transforming, but it's not coming out from having a big problem or having issue with the business. You want that business to grow. You want that business to be futuristic and to look to the future, but you cannot do it with the legacy system. You cannot do it with the legacy, let's say, bad habits. So you have to have new blood in your company. You have to have new ideas, and new ideas and new blood maybe sometimes require new culture, which is the most difficult part in any business, be it family business or non-family business. Even for companies that are not family business, if you are in the business for 50, 100 or 100 years, you have a DNA, you have a culture, which is also your culture, the old one, is the reason why you are still here or still alive. So when I say change culture, it's add to that culture. What you can add, how can you add some flavor that will make it better? But in general, the culture that brought you here is the culture what will take you forward, with some adjustment, with some flavor, with some injections if you want, that will make it better and more future looking.
I very much like that you want to say true to your inherent DNA, right? And it's almost as if you want to you'd rather solve small mistakes or small problems every day than let it snowball into a big issue, right? Because then you're continually improving yourself.
Absolutely.
That comes to, okay, almost restructuring on a day-to-day basis. What about, say, you have a bolt-on acquisition for something that you've done? How are you looking at integrating that into your portfolio?
See,
do you have consultants on the outside, or do you have a team inside?
So it depends. So when it comes to consultants, I have my own way of looking at it. So most of people, they hurry to consultants. So for me, I think it's good to have consultants when it's relevant. It's not for every acquisition you have to bring consultants in. I have seen M&As where we have done everything in-house. And I have seen M&A, everything was done by a consultant. And I have seen also M&As with a merger, or let's say a mix of both. So before talking about consultant, I think you have to start again from strategy. Or we are acquiring this company for what? Why you are going to market and looking for targets? And once you found the target that you want to buy, so the question before you buy it and you think how I'm going to integrate it. So you have to have in mind before you acquire that company, how this company fits in your strategy, how this company is going to interact with other companies in your portfolio. So I have seen many mistakes in some other companies where they just go and acquire and think about it next day. This is one of the biggest mistakes. So then you are bringing a stranger to the house. House is working well, and you are bringing someone you don't know how to deal with. Now you have to deal with because he is already in. So for M&As and for acquisition, I think for the integration is starting from why you want it for, studying where are the synergies, if any, from the beginning. I'm assuming someone acquiring something, there are some synergies planned already, and give it a time. Give it time because it's 2 different DNAs. So the new acquired company most likely has to slowly to be part of that family. It's a new member that will change maybe systems, change policies, and you will start to see this happening over time. Most of the time, people rush it. So they say, okay, they have different culture, they have different system. You start very, very quick. You want to fix things quickly. So give it time and be patient, but also don't give it too much time. So you have to balance somewhere, push, but be patient.
I like this a lot. I want to rewind a bit. When we first started talking, you said country feasibilities were how you got into LDD, FTD, CDD,
Yes,
VDD,
yes.
And that was almost your initial starting point of feasibilities and investments. Walk me through what that was like. So you've done a bunch of operations, you've done a bunch of controls. Walk me through, hey, I want to expand into Kenya. Now what am I thinking? How do I look at expansion?
See, you are taking me now back maybe almost 10 years ago. So when I came to UAE, I came with Majd Al-Futtaim. So I started in what we call it the international head office, which is overlooking the regional head offices, GCC head office, Egypt head office, Saudi head office. And I work with a very smart boss, Polish guy. So he is kind of mathematician. So we talk to each other in the same way. So we love numbers. So he put me on an assignment. First thing, he asked me to recalculate the WACC at the group level. So it was something new. I have never done it. So I was working on the risk profile of every country and to do these things and talking about all the risk and the risk-free rate. All these things was something new for me at that age. And especially I'm coming, I studied in Morocco. So I studied in French. So for me, the language was new. So many things, but I understand numbers. So it was a very good introduction to the investment world from risk perspective, from return perspective. Then slowly he started giving me how to study new countries. So we had access to Economist Intelligence Unit, which gives you a nice report, which is about the country. They call it the country profile, where you have ideas about the political stability, the economic stability, the forex risk, the interest rate risk, and all the risks that you may find in that particular country. Also, because at that time I was working Majd Al-Futtaim retail, so we had access to another portal called Retail Planet, which gives you specifically about the business. Then we had many tools. So my job, it was gather all this information, gather the economical aspect, macroeconomic, and macro politics and everything, and what we call it the country outlook. Then talk about specifically about the industry, retail, not necessarily only supermarkets and fashion, but retail in general. Then start to zoom on the competitor side. Who are the competitors? Who are already in the market? And you think about all other things like taxes, legal aspects. So I gather all this information, and I work obviously not alone with my colleagues and with other colleagues from other departments, and we together we present or make a presentation for the boss to go present it about the country and how many branches or how many store we should be opening, what is the 5-year plan, what is, and first thing, as I said in the beginning, the WACC for that country, the required return for that country. So this was a good introduction.
You've just defined the CDD.
Yeah, somehow.
Yeah.
Somehow. So I did the interesting countries. I did Kenya, I did Uganda, I did Azerbaijan, I did Georgia, Armenia. So, and later I have visited Georgia and other countries.
Georgia is beautiful.
Yeah, but I knew the country from the perspective of investor and the regional expansion perspective.
Very fascinating. Yeah, and then so let me try to understand this as well, because a lot of people who watch, they're at that stage of 23 to 30 where you're either in your first position or you've worked for a few years and now you want to pivot, right? Your pivot, mashallah, was incredible, and it was organic. You learned through talking to someone who understood the kind of language you speak, and then you worked on it. But you also had a lot of academic understanding, right? We mentioned this, you studied the CMA, the CPA, and portion of the CFA. Which one do you think really contributed the most effectively? Or, what were the quirks of each that you think built your profile into what it is today?
So I see here you have two ways. I know CFOs that they don't have any C next to their names, and they are brilliant and they are good. So it's not a prerequisite, but it's something that will help you a lot from the perspective of adding technical knowledge to yourself. So the background why I started this certification, I came here, as I told you, I studied in Morocco. I'm studying in a Francophone or French system where they don't have...
Did you do back? Sorry. Did you do back +4? Or?
Yes, I did back plus, we call it bachelor, which is back plus 4 or back +3 in French.
I did back +4.
Yeah. So I came here, I studied in one of the best business schools in Morocco. So I came here and I noticed that everyone has a C next to their names, the CPA, CMA, and I started looking at this. So what I have done at that time, I was a financial controller. I decided to become a CFO. So how I do it? So I went to LinkedIn. I checked most known CFOs and I was studying their profiles, what they have done, where they have worked, and so on. So I found that the common things between them is they have worked for big companies. And I was working for a big company at that time. So I ticked that first box. Second thing, most of them, they have done qualifications. Most of them, they have done MBAs. So I said, okay, let's tick these boxes one by one. So I started in 2011. I have done my CMA. So I started my CMA first paper I have cleared with self-study, but took me too long. So then second one I cleared through a school. Then at that school, they have been doing CPA. So I said, okay, maybe next thing to do is the CPA. And I locked myself for 9 or 10 months and to finish the CPA. So at that time, my wife was suffering with me because as I cut off weekends, it was like a positive and voluntary jail. So I go to work, I come back from work just doing the CPA. So I finished my CPA. Then I thought, okay, time to do the MBA. So this I'm talking about from 2014 until 2017. So I started my CPA in 2014. I finished around beginning of 2015. Then I was in parallel started my MBA in Manchester Business School in the campus here in Dubai. And I traveled to Manchester. I traveled to Singapore for the seminars for Manchester Business School. And here we go. So khalas, I finished my CMA, finished my CPA MBA. Khalas, I'm ticking the boxes. Then the market started to evolve. And people start calling me. So I first when I went from Majd Al Futtaim to Al Ghurair as a group financial controller, where I was focusing mostly on real estate. So at that time we started being exposed to treasury, where I have negotiated or been part of negotiation of 2 deals, multi-millions, and one of them is above 1 billion for construction. So how to do the feasibility study, how to present to the bank, how to discuss with the bankers, how to negotiate term sheets, how to do all these things. It was construction and project-based project finance, as you said. So all these discussions, it was something new, because for me, when I was in Majd Al Futtaim, I was more on the operational side, on the expansion, on the investment, and so on. Moving to Al Ghurair, I have been doing more on the project financing, I think, plus the treasury, plus restructuring, the normal things. So always as a CFO, you will have the basics, which is you have to have your accounting properly, your reporting. If you are also involved in taxation, if you are involved in insurance, so all these things, for me, these are the basics. We don't talk about anymore. Alas, these things, you have to control. These things are done. Then on top of it, you will have the fancy things, the nice things, do investment, do expansion, do strategy, those things. If you don't have the foundation done properly, you cannot do the things you want to do. Then later, CFA came to the picture. So when I started doing more investment and getting involved in private equity things, getting involved in VCs, investments, and so on, in very much technical things, I said, okay, maybe it's time to upgrade also that side of my profile, which is the investment part.
Very fascinating. Yeah, because it's like building habits, right? Like you have to have the first one solidified, and then you can build another one. If the first one is shaky, then you're gone.
You're right. It's a matter of blocks, and you have to build it.
Yeah, absolutely. From a personal standpoint, now that you've gained all this experience, you mentioned that you like investing in fintech. So how's your personal philosophy different from... Actually, before we get into your personal philosophy, I would love to understand how a family office develops an investment thesis related to or within the umbrella of UAE's vision and UAE's strategy, because that's very important, right? That's
Absolutely.
the cornerstone of this.
So see, any business, be it family business or non-family business, you are operating in an environment. And this environment is your political environment, your economic environment, social, and all the aspects of your environment. You cannot operate without looking at this aspect. So you need to understand the country philosophy. You need to understand the country strategy. If you are looking, for example, at the UAE, so there is a 2050 zero carbon emission thing. So if you are, or we are visionary about your business, and you want your business to be part of that strategy, and you want your business to survive within that environment, you need to consider all these things. You need to consider what the government initiatives are, what are the big companies that are government companies, or somehow they are imitating or mirroring the government strategy, where they are going. So the big names, Toka Mubadala, Adia, so ADNOC, where these companies are investing, where they are going, where the country is going, where the DP
World.
Yeah, DP World, where they are going. So all these companies that are big, and they are representing the tone at the top. So when you understand this environment, you ask yourself a question before you are talking money or business: how can I contribute to the strategy of the country? So, and you find some areas where you, as a company or as an investor, you can add value to feed and to help in that strategy, and in the same time you will make money. But let's say we are all here to make money. But before you think about making money, if you are thinking, how can I be part of that vision? How can I be part of that success story of the UAE in the coming 10, 20, 50 years? Then you are doing it the right way. You're doing it the right way because then you are going with the flow, which is very futuristic and is mean to succeed as they have succeeded in the last 50 years.
Does the government ever offer subsidies or support, or do you have conversations with them saying, hey, we want to be part of this particular strategy, and so we're going to develop something we would like support? Does that ever
I think
happen?
so. You have public information wherever the government they are supporting. If you look, for example, at Make It in the Emirates. So the government is supporting all the businesses that they want to do business in the Emirates. They want to do manufacturing in the UAE. So they are supporting them, not necessarily with money directly, but it's giving you the capabilities. So I think the best support that UAE is giving to the business is the environment itself. So when you have a country where the infrastructure is, I can tell you, I have been in many countries, Few countries that can compete with UAE from infrastructure perspective. Few countries can compete from the availability of capital. The tech, you have the government is highly digitized, and so all these things. This is what really the government of UAE is giving you. Is giving you a leadership that is thinking forward, a leadership who is pushing the country to the right direction economically and at all aspects. So this is what is the government is giving you a philosophy, giving you an environment where you can thrive. And the numbers show it. So if you look at, for example, big names that I have seen in the media, Adia and Mubadala, they are the best among the best in terms of returns. So they are putting 8% plus. This is impressive, and they managed to do this because the environment is helping, because the leadership is helping, and the philosophy of the country is philosophy of success.
I think you're absolutely right. It's also trickled down almost. Like the top will definitely succeed, but then you see startups coming up out of nowhere and doing really well, primarily because there's a sandbox that allows you to iterate and experiment and innovate.
And also, if you look at the numbers, so most of wealthy people now, they are coming to UAE for a reason. Because here you're on top of the safety, on top of, as I said, digital government, digitized government, and here they want you to succeed. They want you to succeed. They are giving you, as a startup or as a business, they are giving you the environment and the conditions where you can succeed and thrive. So that's why you have many people coming here. Nobody is pushing people to come here. They are coming because they want to come here, because they see that from here, even if it's a small country relatively, but you can start here and you can expand in the region. You can expand even worldwide.
And it's fascinating. The other day I was reading about embedded finance, embedded lending, right? And there was this little stat that someone popped up saying 116,500 millionaires with a minimum $1 to $5 kind of cap exist in UAE. And I'm thinking to myself, this isn't a very big city, but that's over 100,000 multi-millionaires walking around.
Yes.
And, many people with much more than that. So yeah, a lot of people...
When wealthy people, they have the option, and they have they can go anywhere they want. They could go to big names. They can go to Hong Kong, Singapore, New York, London, Paris. They can go, but they have chosen UAE for a reason. And those reasons are what I told you in the beginning: safety, infrastructure. So all these things that we have here in the UAE, and I think we are blessed to be part of this country.
But then you tell me now, why did you select Fintech, for example, as your... That's a nice segue for me to do.
So Fintech, maybe it's an evolvement in my career because I'm a finance guy, obviously. And I think it started when I was in the MBA. So in the MBA, we had to do a project. So with my other three friends, we have done a project about how to digitize the rent process. So we have done, it was a nice project around, and I know I heard some companies, they have done it already now in the market. So we wanted, instead of having this 4 checks, how can you make it flexible and easy for the landlord and the people like us who are leasing.
Did you figure it out? I was thinking about this today because I got my updated.
What a coincidence!
I checked RERA index this morning.
What a coincidence! So we try to find a way how we can make it easy for you as if for example you are the landlord and I'm leasing from you. How we can give you the cash on the spot instead of waiting for 4 payments, and how we can make it for someone who's leasing like me to pay on monthly basis rather than getting worried about every 4 months or 3 months you have to get this money. So that was the start. So then I got interested in fintech, especially money transfer companies, where I have invested in few projects around that. I have invested in project that is comparing exchange rates on when it comes to money transfer. Also, I got somehow exposed to insurtech. So from pure investor and angel side. So
are there any startups you want to shout out? Is there anything you want to throw out there, like, oh, check out this product, check out? You can.
So see, in the market, you have I don't have names that come to my mind, but I think if you look at what's happening in EDGM, what's happening in DIFC, so both of them, they are pushing and attracting companies to do new products. And you have young people like your age. They are trying products in wealth management. They are trying products in tokenization of investments and so on. So there are many things. And now you have the AI, the big things now, AI. So I have seen many interesting ideas coming out from ADGM, coming out from DIFC, and also from mainland about fintech products. And I think this will require some, let's say, refining, because fintech is it's a very regulated business. So my advice to anyone who's venturing into fintech, yes, products is very important, but two things that most of fintech investors and most of fintech entrepreneurs forget is regulation and distribution. So they don't know how they are going to deal with the regulation. So they found themselves in the end, for example, if the regulation asking you to have a capital of $10 million, so this is something you have to think about in the first place before you get yourself into that business. So for example, money transfer, it requires a substantial amount of
minimum deposit.
Minimum, because this is money of other people. So the central bank and the regulation is trying to protect the consumer. So before you get yourself into a regulated business, you have to understand the requirements. Second thing, assuming you have the investors behind you who will do it, so how you are going to distribute these people, to distribute this product to people, is how you are going to reach, how you are going to be able to sell. So are you just going to be in the market shouting like many others, yes, buy my product, or you have a different strategy? And here your creativity comes with which partnership you are going to have. Is it with banks? Because most of fintech also sometimes they come like they are going to fight with banks. I think it's the wrong approach to fintech. Fintech is a complementary, it can work with banks. It's not necessarily an alternative to banks. Banks, they have been here for a long time, they build trust, and I think sometimes it's smart to be on the shoulder of a giant. So rather than trying to be the giant from day one, and if you decide to be the giant from day one, it's also not bad strategy. But it's a long journey, and it's a matter of time.
I think with fintechs, I've noticed, I could be wrong, but some of them have very short-sightedness, because they think if we compete with the bank for long enough, the bank's venture arm will buy us, or the bank will develop something internally and integrate us. And that helps them in the short term, but as their brand name, it doesn't survive forever.
So what I mean is, if your strategy is to sell to a big player, this is not wrong in itself, but it should be just clear in your mind that you are building a product that you are planning to sell in the short run, or you are building something like some people, they will come, they want to do a super app that will do everything around fintech. Yeah, maybe. Or you are building a digital bank. There is no right or wrong. So first, do you have the time? Do you have the money to do it? Because yes, it's good to have dreams. It's good to have long-term strategy. But sometimes you'll feel yourself, you run out of gas, and your gas is time and cash.
Very true.
So the question is, how can you, and how much time you have, considering your burn rate, considering how much you need to spend on monthly basis to sustain that product, to sustain that team. And you have to be realistic. You have to dream. I think without dreams, we all die. So we need dreams, but also dreams need cash to be, and effort.
Yeah.
So there is a balance between dreaming and not taking risks. So both you have to have, I think you need to have in your brain somewhere a balance between dreaming and between your ability and your capabilities to get this dream out of the ground and to see it live in front of you.
Very true. And I think to pursue many of these dreams in the future, tech literacy is quite important.
Sorry?
Right? Tech literacy.
Yes.
Like being literate with technology itself. Because, I mean, for example, you can't expect a capital markets person to also be a full stack developer. It's impossible. But what you would imagine is in a few years, our understanding of technology has to increase from what it is today, or from what we were taught as growing teens or kids. How are you trying to integrate that, perhaps personally or professionally, top down? How are you telling your team to take courses to learn about tech in a sense?
So I think companies have to invest in their teams. I think the best investment any company can do is the investment in their teams, in terms of educating them, in terms of training them for new technology and so on. But also, the companies cannot, let's say, cannot be responsible about your career. So you have to be responsible about your career and to understand what's going on in the market, what I should be learning. So this, from personal perspective. From company perspective, I agree. They have to give trainings and so on. But I always take my responsibility, and I take in charge my future. I don't wait for companies to do for me training. I don't wait for companies to invest. If they do it, fine. Fine and lovely. I thank you very much. But some companies, they don't. Some companies, if you want to do, for example, let's say any certification or something you want to do, for example, now AI is a big topic. So if you decided you want to do, let's say you are in real estate and you want to do a diploma or something, or just small training, 2 days, from a very reputable place or institution about AI for real estate, and you ask your manager to do it for you, he's saying no. So should you get unhappy? Maybe this is not the part. They don't have budget or something. But if they do it for you, nice and fine. If they don't do it and you want to do it, and it's part of your career and it's going to add value to you, go and invest for yourself.
Absolutely. I just got a couple of looks saying that we're running out of time. I want to leave you with 2 questions. The first one being, what is perhaps, if you've had a mentor through your career at any given time, what is perhaps some advice that you've been given that you've held close to yourself throughout your career?
I think the best advice I received is whenever you decide to go to a company, you have to ask yourself first question: what are you becoming rather than what you are earning? Earning is very important, but what are you becoming in that company? What kind of knowledge you are developing? What kind of skills you are acquiring in that company? What kind of relationships you are building in that company? Maybe if you are in a position, you are building a relationship with bankers, but with investors, with capital allocators. It depends what you are becoming. So every situation, every company, you have to ask yourself, what I am becoming in that company. Earning will come, because earning is, let's say, is a function of how better you are getting, how much improvement you are doing in your personality and in your caliber. So earnings will come. Don't worry much about earnings. Earning will come because market will correct. If you talk market perspective, if you are today as an investment, you are undervalued, the market will correct at a certain point and will give you the value that you deserve. So becoming and developing your skill is the best advice that you can tell anyone.
Yeah. I think that is actually the perfect note to end this on. Thank you so much for coming on. It was a pleasure.
Thank you very much. Thank you. My pleasure.